Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, as always, joined by the University of Missouri's Ben Brown. How's it going, Ben?
Oh, it's going all right. How are you today, Will?
Doing all right. I'm in yet another location. I'm at my sister's place currently, raiding her office and using that. So,
Oh, cool.
cool artwork over here and, pictures and maps and
I
stuff. A
miss the
lot
palm
more,
tree. I
a
miss the
lot,
palm trees.
yeah, yeah, a lot more colorful than my normal workspace. So, but
Very good.
it's good. So, Ben, anything coming up for you interesting? We got Christmas. We're a little over a week away from Christmas now. Or no,
Yeah,
right out a week.
yeah, right at a week from today, because we film on Mondays. And so right at a week, and I'm ready. I've got all my Christmas shopping done. Maybe one more gift I need to get, but pretty much everything done. Christmas cards out.
So yeah, I'm just about there. Still got to get a couple more, but hopefully we'll get that marked off later on this afternoon. So
Yeah.
without too much chat around Christmas presents, we could talk about the gifts of the markets and where they sit at currently as we look at the week. A lot of downhill trends overall on the week, kind of up and down for a lot of things. Corn and soybeans kind of trended pretty flat with a little bit of early action coming out of last Monday and Tuesday. But looking at where we sit currently, March 24 corn down 4 cents at 477. December 24 corn down 2 cents at 508. Soybeans for January 2024 down 9 cents at 13.27. November soybeans for next year down 4 cents at 12.84. Soybean oil on a cents per pound basis down 60 cents at 50.64 cents. Sorry, down 6/10 of a cent. Said that incorrectly there. That'd be a heck of a loss. Soybean meal by the short ton for January is down 40 cents at 412.80. 23 wheat for March of the 24 year up 8 cents at 617. July wheat for 24 up 8 cents at 633. And then the January contract for crude oil up $1.23 per barrel at 72.96. So, Ben, a pretty mundane week overall when it came to trade and the news around trade. So, what are your thoughts as we see some slight adjustments coming into this week?
I think this is probably going to be pretty standard here for the next 2 weeks. Some pretty sideways trades, nothing overly exciting. Of course, as we get closer to the end of this week and traders start to take, potentially long holiday weekends, that's really going to kind of lower volume and we're not going to see as much market moving information come out, I guess is what we could say. Now on the lower volume we could see some days with bigger changes in prices, but that's pretty rare even on the lower volume. So, I think this is probably the pattern we're going to experience here for a little while. There's just nothing really earth-shattering coming out that's kind of starting to rock these markets.
Just as we've noted the last couple of weeks, we got some weather watch in South America, but that's being held closely by the market. Not a lot of changes to the Federal Reserve interest rates or anything to the general economy. So as we really look into next year, looking ahead at what farmers might be thinking when it comes to planting, overall acreage really comes down to I guess the overall amount of corn and soybeans and wheat and other products that can go into the ground. And really, the U.S. isn't making any more acreage. So today we're going to dive in a little bit about the shifting acreage picture that does exist within the U.S. So, Ben, I sit, for the most of my time now around the Columbus, Ohio area. You're around Columbia, Missouri. And what's notable is just outside of those two cities, it's a lot of farming. The agriculture is the number one economic driver. And at least around me, over the year and a half I've been in Columbus, we've seen a few more subdivisions coming around me, a handful there. And normally when that expands, that takes up some more of that agricultural land. Also seeing some solar panels going around the Ohio-Indiana border and some things like that. So, Ben, what are your thoughts on the future of farming within the U.S.? I know that's a very large question, but as we look at land usage, how do you see maybe some potential shifts in the short term at what agriculture might look like?
Well, this is a hard question for me, I think, and then it's also just a really big question in terms of the long-term planning of U.S. agriculture and one that's very serious, right? There's a lot of people that have strong opinions on all sides of this. I will say that at least for the data and how the data plays out, we're not seeing huge declines in farmland. Um, People might be seeing that locally. You know, you mentioned a lot of those drivers. There's other drivers, and I think, you know, we've seen some record farmland sales here the last few months. That's kind of been sparked a little bit with this growing notion of, well, land's a fixed asset and there's not any more of it, so we're just going to continue to price that product up. And so there's some of that that plays in, but historically what has happened is we have, you know, areas where we've seen, you know, declines in farmland. We've seen other areas where we've brought pasture into cropland, or we've brought previously non, you know, even pasture-based land potentially into the picture as well. Because when we talk about principal crop acres, that also includes hay and pasture. And that really hasn't changed all that much over the years, maybe some slight declines. When we look at crop specifics, sure, we've seen crops that have really increased. Soybeans for the last, you know, for a period of time at the beginning part of this century, you know, really increased in acreage up from 50 million up to 80 million, 85 million, 90 million. That all came at kind of the expense of some wheat acreage and other crops that have declined over time. And we've seen expansion and double, well, I shouldn't even say expansion and double cropping, but we've seen, you know, toying around with double cropping across different crops and stuff like that. So we're finding ways to be more, like what's the word I'm looking for? We're finding ways to increase productivity on cropland, you know, on a fixed amount of cropland, even when we lose stuff for like development and other things like that.
We're really looking at increasing that efficiency even as the acreage dips just slightly. And, Ben, the numbers that I'm looking at over the last 3 years or so, we've moved from about 253 and a half million acres of cropland down to just over 250 million. So, a 3 million acre loss. But, in the grand scheme of things, that's not, very much comparatively to how much we're farming. And we talk about the average yield expectation, and that has, shot up in this last several decades. So when you look at the comparison there, we're not necessarily losing a lot. And when you think about the overall economics too, when you look at maybe some of the surface level threats to a lot of agriculture, a lot of farm ground, you're looking at maybe solar farming and things like that. But that's such a high intensive cost and difficult thing to get into and to make profitable. You'd imagine that that's not, I guess, an overly serious short-term threat as things stand now. It's hard to predict, as you noted before, the further out you get into the future, how things might go, the economics of things. But in the short term, it seems like for a lot of productive ag ground that, that is the best place for it to be as far as an economic standpoint. I don't know if you'd agree with that.
I actually don't know if I agree with that. You know, to some extent, right? Like this is such a case by case. This is, I mean, it's a very sensitive topic, and there's not a broad statement that I think overlays everything. Um, yeah, this is a
It's, a-
hard
it's it
question.
really is a tough topic though, because I don't know, you see the discussions and I see billboards and things in people's yards that say, you know, keep solar farming out of agricultural ground. And I think that is a very localized issue depending on where you're at. But it'd be interesting to do a deep dive on solar farming compared to, the production of that and the economics of that on energy production and profit margin there.
Sure, and people have. I mean, those have been done, and they're out there. A lot like a lot of issues. You know, you can pretty much find the data to back whatever cause or whatever point you want to make. Um, you know, we've seen production, or we've seen solar panel growth in certain areas of the country. You know, it's a real hot button issue for areas where it's coming in. You know, there's valid reason why companies want to rent land rather than buy it, and it comes down to the same reason farmers, make some of their financial decisions. It takes a lot of capital to buy that much land, and so if you can kind of rent land, that helps a little bit with the financing side of it. So I mean, there's reasons for all of that. Why we're seeing solar come in certain places is also kind of based on, access to trans transmission lines. It's, you know, sometimes topography, it's sometimes, the cost of getting it to structure. So there's a lot of things that kind of impact that. But yeah, there's not really a good way to describe it across the entire country.
Exactly. And, there's so many different factors that you talk about there. And then you have the added layer of, state legislatures and state laws and different things like that. Going back to Missouri, with the pipeline, energy pipeline that was looking at going through northern Missouri and how much of a hot button issue that became. So when you see those things that are national level projects or at least multi-state projects, then they get discussed very differently in a state by state basis. So, Ben, as we look forward, I don't want to spend too much time on this topic because we're running out of time here. But as we look forward into the week, obviously a lot of trading around the holidays, or excuse me, a lot of events that could impact trading being shifted around because of the holidays. So, what's the schedule that we're looking at for this week when it comes to reports and things to watch?
Well, this week it's pretty standard. Everything's pretty much on schedule. We do have a busy day on Friday, right ahead of that holiday weekend, with a lot of livestock reports coming out. The fourth quarter hogs and pigs report, cattle on feed, all come out Friday afternoon. But then we do enter into that long holiday weekend. So potentially for some markets to make some interesting moves, or at least counter to our intuition on Friday.
All right, Ben, as we look ahead, hopefully, if we don't talk to people beforehand, have a Merry Christmas. If you would like to catch up with some more of our episodes here at the weekly commodity market update, you can do so at brownfieldagnews.com. You can also find our sister program, the weekly livestock market update, at that same location. Ben, thanks again. I'm Will Robinson on Brownfield.